Hello and welcome to the Cryptocurrency News channel. We're going to talk about two things. One, we're going to go over some of the tax news, which is going to be huge, and it could actually affect your taxes this year for crypto. And two, we're going to talk about Bored Ape Yacht Club and what the contract actually says. Now, don't get afraid of the Bored Ape Yacht Club thing. The contract the smart contract might be shady, but they are talking about a $5 billion valuation, so it's very doubtful they'll pull any of this stuff. So let's actually talk about the tax news first. So the big thing right now is there was a court case the IRS basically just waved the white flag and gave up on, where a couple actually sued for their they didn't sue, but they asked for their taxes back from the IRS because they had not realized crypto staking profits. Now, staking profits might actually apply to yield farming as well. I am not sure if they apply to mining. I don't think so, but I am not really sure. But they actually argued that since the IRS does count crypto as property, then the property is actually being generated by them, and they should not actually have to pay taxes on it until they sell or trade, until they realize the profit. So if they actually win this, which I think they are actually, you don't actually have to pay tax to the IRS for staking rewards, maybe yield farming rewards, until you actually cash in the stake or yield farm. And no, the court case hasn't really been tested yet, but the IRS actually did offer to pay the couple the money back and have them pay the taxes once they actually realize the reward. But the couple actually rejected the IRS's offer, and they wanted clarity for this. Now, the only reason the IRS would actually basically agree to their demand is because the IRS actually sees strong arguments, because the IRS does actually treat crypto as property, so it's going to be hard for them to actually argue. Now, the bench trial is set for 2023, with the discovery phase ending in March 2022, which is very, very soon. But however, because the IRS has already signaled that it's actually willing to pay the taxes back, and they're still going to have to pay the taxes once they realize it, but it's also, that means the IRS has actually signaled that it acknowledges sort of that the staking taxes don't really have to be paid or shouldn't be paid until the tax is realized. And that makes perfect sense because otherwise you're taxing unrealized gains. Unless you are willing to actually accept the taxes in crypto, you have to wait until the person realizes the gain so they actually have the money to pay the taxes. That makes perfect sense, obviously. So the thing is, like, what do you do? If you've gotten a 1099 MISC from Kraken or Coinbase for staking, you should definitely just file according to that. And then maybe you, yes, you can also ask the IRS via a lawyer for your money back. The IRS has basically said they're willing, in this case, to actually give the money back, so you might be able to get it too. So pay the taxes and then ask for it back via a lawyer if you want to actually do that, if you have enough to actually if there's enough at stake to actually do that. The guy basically wanted like $3,000 back, so it wasn't actually that much money. He didn't pay like millions of dollars or anything. But I think he's actually selling on a matter of principle right now. So you could take that option if the company sends you a 1099 MISC. You could also seek a crypto accountant and see what they actually say. I would not just ignore the 1099 MISCs from Kraken or Coinbase, because if they send you a 1099 MISC, they send the IRS a copy as well. And the IRS will not be happy if you ignore the 1099 MISCs. Trust me. I'm pretty sure they will not be very, very happy if you do that. So don't ignore the 1099 MISCs. You can possibly ask the IRS via a lawyer for some of that money back, because it has been successful before. Now, what do you do if you didn't stake at Kraken or Coinbase and you just staked on your own wallet? I would actually keep tabs of how much I made, but I would actually wait for the resolution of this case. Like, if you realized your staking rewards, you got to pay the taxes. There's no question about that. If you sold or traded the staking rewards, you got to pay it. There's no question about that. But if you're just if you haven't claimed yet or you haven't realized the rewards yet, I would definitely kind of wait. I would wait, take note of how much I made, and then pay it when I have realized it, or wait until this lawsuit actually comes out, because I do think it's going to come out in the couple's favor. The IRS has already signaled it's going to kind of wave the white flag and basically wait until the gain is realized. So I do think that you can actually save yourself from being taxed on unrealized gains, because it doesn't work no, they don't tax for unrealized gains anywhere else. They should not tax for unrealized gains here. So that is the first part of it. That's kind of like what I would do. I would definitely seek an accountant's, if you have a lot of staking rewards, definitely seek an accountant's opinion. I am not a certified public accountant, but that's just how the lawsuit and everything is actually working out and how the IRS is responding. And how the IRS is responding is very, very, very important because they're basically saying, hey, you guys are right. You shouldn't have to pay taxes until the gains are realized. So that's that bit. The second thing is that Congress has actually Congress has actually submitted a bill that that says like we shouldn't tax crypto transactions of $200 or below. Now, they're definitely going to amend the bill to cover loopholes, so you can't just like withdraw $10,000 at $199 at a time. They're definitely going to do that. So if you want to withdraw $10,000, you still got to like pay the taxes and everything. But for smaller transactions and payments, you may not actually have to pay any taxes on them. Of course, that hasn't come into effect now. It'll be at least a year before that comes into effect, is my guess. So for right now, you'll still have to pay the taxes, but that's something to look for in the future to keep your eyes peeled if you have a lot of crypto that you want to cash out sooner or later. If you want to cash out for small amounts, you might actually want to wait until that actually comes down, but it will be probably a year or two at least. The second thing I want to talk about is the Bored Apes Club thing. So the Bored Ape Yacht Club. So it's been valued at something like $5 billion. That's pretty crazy. But did you know, like I've been informed that the smart contract means that the creators can always mint more apes at will. And if the system actually gets hacked, if it gets hacked, they can delete the apes if they so please. But the thing is, like, I doubt either of those things are going to happen. Well, they might mint more later on after like some kind of dealings. But I don't think they'll delete all the apes because it's valued at a lot of money. A lot of people paid a lot of money for those apes. And if you just nuked them all, I think there would be people that would be ape mad at you. So I doubt they would do that. But that's just I think that's a fun little thing about their smart contract. The makers of the collection can mint more apes. And they can also nuke all the apes. But I doubt they will nuke all the apes. So that's your information for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.